Sarah Larby, guest host of The Everyday Investor and producer. I'm really excited for an amazing show, but before we get into that, keep in mind we work hard, but we want to have something at the end of the tunnel that's not going to require 30 plus years of work. So start investing early, make the right moves, be strategic, take action, and you can retire. I retired in 7 years, and you can too by doing the right things every single day and watching the right show. And I want to say thank you for tuning in, and don't go anywhere. We've got a special guest today. We'll be right back. Today, I am speaking with James Lloyd from US Properties, discussing how to invest in the US as Canadians.
And, as a Canadian, if you're looking to invest in the United States, one of the first things you really want to look into and ask about is how you're going to hold these assets correctly for liability and taxation reasons, right? If you do it incorrectly, you could potentially have some issues on your plate with double taxation. If you do it correctly, you won't.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Sarah. Welcome back. Before we talk to my good friend James Lloyd, let's see what's happening in the world of stocks with Omar Khan. Omar, over to you.
Thanks, Sarah. Omar Khan, guys, here with Data Trading Weekly Market Update. Now, the markets pulled back a little bit last week because of this nasty word that keeps coming up, inflation. I'm sure you've seen it in the grocery stores, out and about. You're probably seeing prices go up. Now, inflation is not the best thing when it comes to the market. Stock market gets a bit worried because future expected growth could be expected to be lower because central banks would have to raise their rates. Now, I don't want to get too much into what that means. Basically, the fear is interest rates could go up, therefore slowing down economic activity. What's happening right now, though, is that corporate earnings, the amount of money companies are making, are still coming in very strong. So the market keeps pushing all-time highs. Now, that will continue, but we're going to have to keep an eye on this nasty thing called inflation and to see if corporate earnings keep coming in. So far, so good. And we're about to enter the good part of the year statistically with November and December, which is supposed to be a really good time of the year for the stock market. So let's see what happens.
Thanks, Omar. That was awesome. James Lloyd, welcome. How are you?
I'm doing really great, Sarah. It's a pleasure to be here. Thank you for having me.
I am super excited. You have built, a really awesome portfolio. You've helped many investors along the way as well, and you are investing in the U.S., but best of all, you are Canadian investing in the U.S. How did you get started with that?
My lifelong friend and company president, Wojtek Mardula, was a Canadian real estate investor. And about 5 years ago, he was lured to Detroit because they were looking for what most Canadian investors are looking for, which is more cash flow and affordable acquisition. And, after he got down there and actually saw the product and saw the neighborhoods and the homes and started to purchase, the plan really started to form this company, US Properties. From there, I came in as the sales manager to alleviate some of the stress and workload for him and be with the client base. And, from there, we started to go to Detroit regularly. We saw the transition of the city. We started to acquire. And from there, it's just grown into where we are today.
Awesome. So let's just say, there's somebody at home wanting to invest in the U.S. Let's talk about some of the things that you've learned along the way and that we should know as Canadians investing in the U.S. market. So maybe let's just start with financing. How does the financing piece work if I wanted to go buy something in Detroit or Florida or whatnot?
Well, in Detroit, the lenders are a little less favorable than they are in the South. The U.S. lending system is asset-based, right? So what does that mean? That means that, they really want you to have an established asset that you own outright so that you can leverage it. And then if you default, they can lien against it, right? So it's a little different than here. Like, for example, when I went to Detroit 5 years ago, I was James from Canada. I didn't have a social security number or a SIN, so I was a little bit of a liability to lend to. What most of our investors do is they come down, they'll buy the first property, just the first one with money from Canada, be it a HELOC, a JV, a refi of a property here. They'll own that asset outright. And then now the lenders will work with you all day because you can refinance the property after a 6-month period, pull equity out and scale, and they're happy to do that because you own the asset and it's asset to start your acquisition process from there on out.
Okay, and obviously,